Good afternoon. Thank you very much for joining us today. I'm Kay Swinburne, Chair of the IRSG Council and Vice Chair of Financial Services at KPMG. It's my pleasure to welcome you all to the launch of our new IRSG report, The Use of Central Bank Digital Currencies, CBDCs, in Wholesale Markets. The report has been written by the IRSG Global Regulatory Coherence Committee with the support of Clifford Chance. Thank you to all our speakers and panelists for giving up their valuable time to join us today. And I'm pleased to welcome as speakers, Diego Ballon Ossio and from Clifford Chance to tell us about the report. And of course, our expert panel who will discuss some of the findings. And as has become second nature with these events, I'm going to start with a bit of housekeeping. So please be aware that today's event is being recorded and may be shared on our digital platforms in the coming days. And please post any questions you have in the Q&A box at the bottom of your screen. And we will endeavour to answer some of them later in the session. Now, if you have any technical issues, and I've been having a few myself this morning, please post your query in the chat box and the technical team will try to assist you. And finally, we'll all receive a link to the report after today's event, which we aim to wrap up about 2:30 at UK time. So, before I hand over to Diego to tell you about the report's specific findings, I firstly want to say a few words on the significance of central bank digital currencies, especially in the wholesale space, and why this report, therefore, is so important. Interest in central bank digital currencies, known to most people as CBDCs, has been consistently growing over the past few years. And at present, approximately 90% of central banks worldwide are investigating the feasibility of adopting a CBDC. And in its annual economic report, the Bank of International Settlement provided a vision for the future monetary system, which utilizes the benefits of CBDCs. While the concept of CBDCs could lead the way to a new way of making payments with reduced costs and increased efficiency, it is important to fully understand any challenges and risks that CBDCs may bring and what legal and legislative frameworks should be in place to govern their development and their use. It was in response to these challenges that the IRSG, in partnership with Clifford Chance, has undertaken this work. At its core, the report argues that industry, regulators, and policymakers must all play an active part in the development of the regulatory and legislative framework for central bank digital currencies. In creating the right balance between consumer protection and encouraging innovative, competitive markets, we need to ensure regulation is proportionate to the nascent market of these central bank digital currencies. In an effort to arrive at this balance, the report provides valuable insight into the benefits, design considerations, and outcomes of CBDCs and examines a number of use cases. It consequently identifies a number of recommendations which should underpin how jurisdictions and practitioners can progress from the development of CBDC frameworks in the wholesale space over the next couple of years. These are firstly, the development of global regulatory principles for globally interoperable wholesale CBDCs. Secondly, the establishment of a high-level expert group on CBDCs. And thirdly, a jurisdictional initiative to implement the above framework. And of course, last but not least, there needs to be concern about regulatory deference and consultation across jurisdictions, and of course, with the private sector. And this will ensure that CBDCs enable economic growth, ushering in potentially a new era for digital payments. Now, these guiding principles and recommendations have been arrived at following engagement with stakeholders, both financial and related professional services industry, national and global regulators, and indeed standard setters. And I'd like to finish my opening remarks by thanking everyone who has got involved throughout the development of this report, and in particular, Clifford Chance, who have held the pen. Your contributions have been invaluable in building a comprehensive view of the steps that industry, regulators, and policymakers can all begin to take to ensure the emerging legal and regulatory framework for central bank digital currencies across jurisdictions is fit for purpose and best meets the needs and expectations of its end users. And we look forward to working with you as we seek to take the report's recommendations forwards. Now, without further ado, I'm going to hand over to Diego to tell us more about the report. Over to you, Diego.
Thank you very much, Kay. Thanks. I think we're gonna put the report on the screen. So maybe if Selma, you could share it. Perfect. Thank you so much. Well, yes, my name is Diego Ballon. I'm a senior associate at Clifford Chance, and I have the privilege today of presenting the report, which essentially was put together by a working group of industry practitioners and banks and just general stakeholders. And without further ado, let me dive into what the report does. We've tried to put together the report on the basis of some use cases that essentially aim to identify some of the key issues that CBDCs will be faced with and that when designing policies need to be considered. So we start with the first slide, please. The most important part is to basically explain what we're talking about when we say CBDCs, because it may mean different things for different people. The report assumes that CBDCs are digital currencies that are backed by a central bank and that are issued on an electronic system which achieves benefits that are similar or the same benefits as the distributed ledger technology that is available through stable coins or digital crypto assets that have been privately issued a few years back. And just unpicking that definition a little bit, what we mean here is that it's an official currency backed by a central bank. By that, we mean that it's a liability on the central bank. And so that is a unique feature, which is unlike any other digital coins or cryptocurrencies that are out there, in that it has the full backing of the central bank's balance sheet when we are transacting with it. And so that is really one of the core benefits and really a unique feature. The other benefits are this reliance on distributed ledger. And distributed ledger, I won't go into the technical nuances of how it works, but it enables record keeping because it works on a blockchain which basically records transactions as they occur within the blockchain. And so every movement of CBDC that is being done from one wallet or from one account to another account is recorded. And it is very clear then to reconstruct the movement of a particular CBDC as it passes through the hands of the participants of the system. And that, is a unique thing that not other payment instruments don't typically have. The other thing is that it's efficient. Because it all sits on an electronic platform, it is possible to very quickly make payments, and that creates this efficiency and the ability to make payments without any time lag. And then finally, it is technically possible to enable access to everybody who is able to create a wallet on that platform. That's sort of the DLT benefit that we've seen. Now, whether that accessibility is opened up to everyone or not is a question, but that is one of the benefits that the technology enables. I'm going to talk through some of these benefits in the context of the use case again, but moving on to the next slide, what I wanted to explain was that what we've done in the report is we've looked at the use cases and then thought about some of the key challenges that arise when we're thinking about CBDCs. And the report in particular touches on some of the concepts that are very crucial and that people will have heard in other aspects. And one of them is interoperability. Interoperability is this ability to use the system so that it interacts with other systems. Interoperability is not a legal concept in itself, but it actually enables usefulness. The more interoperable a particular framework is, or a particular set of rules are, the more able it is to be used for other things. And what I mean by that in this context is that if we've got an interoperable CBDC framework, then it is possible for us to use that CBDC framework to work with other platforms, with existing payment methods, with whatever we want it to be used for. And so the more open it is, the easier it will be to be integrated within the wider economy, and in particular within the wholesale markets. What we focus on, as you will see in the use cases, is the ability to work with settlement systems for securities, for example. The other thing that the report touches on in various aspects is the role of the private sector. While CBDCs will be backed by, or will be a liability on the central bank, or at least that this is the assumption, the private sector plays a crucial role in enabling CBDCs to be used in the wider economy, and in particular in the wholesale markets. Why? Because the private sector is much more adept than central banks in providing services that facilitate and actually build towards the adoption of central bank digital currencies within other payment transactions. So, for example, it will require the private sector to build a solution for central bank digital currencies to be used in the context of security settlement, or in the context of retail payments, etc. And so that there is an important role that the private sector will play. And then finally, the other thing that the report focuses on is legal certainty. Ultimately, any transactions done by CBDC need to be legally certain, and we need to achieve that certainty that we currently have in the wholesale markets. So moving on to the first use case, please, the next slide. We started off with the use case that has been considered by most central bank digital currency projects out there. So many central banks are thinking about the use of CBDCs, and their starting point seems to be the retail use of CBDCs. And what I mean by that, retail CBDCs are essentially CBDCs that are to be used by individuals within a jurisdiction. And what we're thinking about here is, the ability to use CBDCs to pay for your weekly shopping, to go to Tesco's or Sainsbury's, or to pay for your daily spend as an individual user. And that is something that has been considered quite a lot. What this report sort of try and do is to focus the mind on, while that is an important use case, that use case has some wholesale provider impact, because there will be merchants who will facilitate the payments, and those merchants will capture a whole range of CBDCs, of retail CBDCs, and will then sort of become super users of CBDCs. And so there is a wholesale aspect to all of this. Yeah. And now thinking about the use case specifically, what we've got in this slide is we've assumed that the central bank would be running this. And so the CBDCs are backed by them. It'd be a liability on the central bank. And that we've got two intermediating providers. We've called them Bank A or Bank B. In the future, and when CBDCs exist, it may not actually be our traditional banks that are these banks. It may be a technology provider that's acting as Bank A or Bank B in this context. But we've called them banks because this is what the type of provider that we're familiar with. We're talking about an intermediator who is enabling the transactions on CBDCs. And that is a likely design choice, because it is unlikely that a central bank would simply open up their platform for direct connection by retail customers. So we think that there will be an intermediating entity that will sit in between. And in this particular example, we've assumed that bank is actually holding there will be legal claims that are passed through that bank all the way up to the central bank. And so if you can see, the retail customer is going to have a legal claim on its CBDCs, and that represents then their CBDC credit. And so they can make payments, and it is possible that these payments would then be settled between Bank A and Bank B. There's some questions that arise in this example, which are actually relevant, not just to this example, but to all other examples. And these are, what's the status of the CBDC in the system? Does the CBDC represent a debt claim, or does it represent an actual value in the same way that banknotes represent value today? And that's a tricky question that must be answered from a legal perspective. It's a design choice. The policymakers must make a choice there and decide whether you will recognize CBDC balances as being a debt claim against the intermediary or potentially against the central bank, or whether it simply means value stored in the payment method that you're holding, which would be the digital representation in the wallet. That's a design choice. The other question is, what's the status of the intermediating entity? What are they holding any credit for the customer or for the merchant in this example? Are they the ones that are holding the central bank's balance sheet debt, or are they simply a pass-through of that debt? Or are they actually a non-exposed intermediary, whereby actually the debt claim arises directly between the retail customer or the merchant here against the central bank, and the intermediating entity is therefore not regulated? That's an important question, because you could then simply look at the intermediating entities as a technology provider rather than a bank in the way that we understand it. Now, that doesn't mean that it wouldn't be necessarily regulated. Maybe there will be new regulated activities that apply to it, but that's a question. The other question that arises is, if we've got this construct around the CBDC, what happens to legacy cash? And will it be the same for a customer to pay with legacy cash? Would it be accepted in the same way? How are we making sure that our legacy cash stays on the same footing as CBDCs? That will be more and more important as we start rolling out CBDCs, and we want to achieve the widespread adoption, when there may be a portion of the population that actually is not ready to adopt digital standards and want to stick to cash. And we're seeing that more and more today. The other questions that arise, and this is in the context of some of the CBDC projects that we've seen, is, are there any volume restrictions applied to the CBDCs, and how should those volume restrictions be handled when you've got a merchant, for example, that's acting as a CBDC super user who will actually be capturing lots of payments at the same time? What do you do with those volume restrictions? And what I mean by a volume restriction here is, what happens if the central bank says retail customers should only use CBDCs up to a certain amount? Say, for example, the £2,000 a month, or £200 a day to make payments. So it's a low value retail payment mechanism and not a high value payment mechanism. What are the access restrictions to CBDCs? Would this be open to anybody? What are the age restrictions? And then, more importantly, what are the access restrictions for intermediaries if we've got them? Like, who can act as an intermediary? Do you have to be a licensed bank? Do you have to be a technology provider? Presumably, one of the questions will be, how safe is your IT infrastructure that you're going to be providing, and how easy it is to hack that? Those will be relevant questions that will need to be tackled, and there will need to be certain standards around how you set these access restrictions. And then the final bit, which is also very, very important, is, how do you handle privacy and AML? I said at the very beginning that central bank digital currencies will enable transparency of record keeping and will record all of the transactions. That obviously means that you'll need to make sure that privacy is kept abreast, and that AML considerations are possible and able to be rolled out. Presumably that will sit with the intermediaries and not directly with the central bank, but that's again something that will need to be considered. So moving on to the next slide, where we've got the second use case around security settlement, we've got a similar arrangement here. But here, what we're assuming is that we've got CBDCs that are being used in a wholesale markets transaction, where the wholesale user will be paying for their securities through CBDCs. And the question here really is, how much can we benefit from this efficiency point that I was talking about at the very beginning? It is technically possible to achieve what insiders call atomic settlement, which means that you can actually settle CBDCs almost instantly. Now, the question to that is, do we want that? Do we want securities to settle instantly? And what are the benefits and what are the drawbacks of that? We've seen certain jurisdictions that had a T+0 settlement cycle where that wasn't actually beneficial because it killed speculation and it killed shorting of some of the securities. And so there's a real question around whether some of these benefits are something that we want to achieve. But no doubt those benefits can make the whole process much more efficient. So that's one of the key aspects. The other aspect is, what's the status of the platform? Will the platform be regulated? Because it's confining lots of the considerations or lots of the roles that currently are being performed by various market industry providers. And so that's a question that needs to be answered. Moving on to the last use case, which is the FX settlement use case. In the next slide, please. What we're talking about is the use of central bank digital currencies for wholesale cross-border transactions. And here we're really focused on the ability of two CBDC projects talking to each other. Are they interoperable? Can they work with each other? And then lots of legal questions arise in that context. What's the settlement point of that transaction? How do we deal with netting? How do we deal with settlement finality? How do we deal with all of those legal protections that exist in the context of payments within a national payment infrastructure, where we're trying to roll that out across multiple jurisdictions? And those are real policy choices that need to be made, and that's legal certainty that needs to be created. Those are the use cases. So just moving on to the next slide. We've come up with a series of outcomes that we think are desirable outcomes that would foster the use of CBDCs. And I've set them out here on the left-hand side column. I've lifted them from the report, so I'm not going to read them out, but just to say that what we want is unrestricted access to the use of CBDCs, to the connection. The more people can intermediate CBDCs and access the central bank balance sheet, the more wide use of CBDCs is enabled. So ideally, we want no limitation on that. We want legal protections for CBDCs in the same way that I've described. We want to be able to achieve wholesale market transactions safely. We want to ensure that CBDC value remains at par with the local currencies. And obviously, we want to achieve that regulation enables cross-border uses of CBDCs, cross-border payments. So we want to avoid regulatory fragmentations. Ideally, we want a high-level set of principles that can apply across jurisdictions. And that takes me to the last slide, and I'm slightly over time, but the last slide. These are our recommendations, which tie up with our outcomes and desirable outcomes, which is that we are really asking for in the report for global regulatory principles that are underpinned by financial market infrastructure and international standard setters, that we've got a high-level expert group that sits there to help shape these principles, and that jurisdictions can apply them through the use of regulatory deference. That's me. Thank you very much for the time. With that, I can conclude the presentation. I'm sorry, I was meant to hand over to Antony. Antony, please. He's going to take us through the panel.
Thank you very much, Diego. Sorry, I was just having a trouble with my mute button there. I think that was an excellent presentation and really helpful of you to go through that. So first of all, just to introduce myself, my name is Antony Manchester. I'm chair of the IRSG International Regulatory Coherence Panel Committee. I'm also a managing director at BlackRock, covering public policy and government relations in the UK. So I'm very, very grateful to my fellow committee members and also to Clifford Chance for partnering with us on this report. So thank you very much indeed for that. And I'm very grateful as well to our panelists who are going to be discussing the report for the next half hour or so, and of course taking questions. So first of all, just some housekeeping points. Please remember this is being recorded and it may go up on the City of London's website. So that's just to bear in mind. It's not Chatham House. And also, if you've got any questions, and we really hope you do, because we want this to be an interactive discussion, please post them in the Q&A box at the bottom of your screens. So without further ado, just to introduce the panel, I'd like to first introduce Oliver Siegrist, who's the advisor at the BIS Innovation Hub. Oliver leads on central bank digital currencies at the Swiss Center of the BIS Innovation Hub. So welcome very much, Oliver, and thank you for joining. Caroline Meinertz, who is a partner at Clifford Chance and partnered with us on the production of the report, working closely with Diego. Kunal Janji, who's a MD and partner at Boston Consulting Group's London office. Kunal has taken a leading role in the industry coalition and CBDCs here in London, including on work on some of the technical design features of CBDCs. And lastly, but certainly not least, Josh Lipsky, Director of the Geoeconomics Center at the Atlantic Council, who's joining us from the US today. So thank you very much for joining us from across different time zones. It's truly a global panel for a global issue. I'm going to start first with Oliver. You've contributed significantly to the CBDC work and through your various research and more recently with the experimentation at the Innovation Hub. What can you tell us about these recent experiments and in particular, what sort of aspects of this have come out from a cross-border perspective?
Thanks a lot, Anthony. I'm happy to share my views here, and it's my own views and not the views expressed by the BIS or any other institutions. Many thanks to IRSG and Clifford Chance to invite me to this panel. So, as you say, Anthony, I was involved in a couple of experiments related to wholesale CBDCs, in particular in project Helvetia Phase 2 and also Phase 1, and in project Jura. These projects were run at the Swiss Center of the BIS Innovation Hub. And for those who don't know the Innovation Hub, so the Innovation Hub is still a fairly new kid on the block, I would say. It was founded in 2019. It's part of the BIS, of course. And with the Innovation Hub, we really aim to push the technology frontier of central banking, and we do this through very practical work, as shown by Project Helvetia and Jura. So we do POCs, prototypes, minimum viable products to gain practical insights and experience on wholesale CBDCs, but also on other topics. Now, on the scope of these two projects, Helvetia is kind of a domestic focus and focuses on security settlement and also the integration of these new and rising upcoming DLT infrastructures with the rest of the existing financial ecosystem. In Project Jura, the focus was slightly different, as Anthony already mentioned. So there the focus was on cross-border settlement. And there we experimented with the exchange of Swiss franc wholesale CBDCs versus Euro wholesale CBDCs. Now, so first, I think it's important to first think about the motivation. So why do central banks actually do these experiments? And I think there are 4 points that I could briefly highlight here. So first of all, it's certainly curiosity. So central banks want to understand the potential changes brought by DLT. And then the second reason is also some kind of preparation. I think we are at very early stages of the development in general, but still there might be a case for a wholesale CBDC or also for a retail CBDC in the longer term. And therefore, central banks need to explore technologies and they need to understand the benefits and challenges. The third reason is certainly also this integration and interoperability part, as I mentioned before. So wholesale CBDCs won't just live on a single platform. They need to be integrated with a broader financial ecosystem. That is very important. And then obviously there are also shortfalls in today's systems and arrangements. So especially when we think about the cross-border space, there are problems. Cross-border payments, as we know, they are relatively slow. It's relatively expensive to move money across borders, and the transaction chains are long and to the customer mostly opaque. So there is a case, or might be a case, for CBDCs in the cross-border space. So I see lots of commonalities. I think, and I think the report resonates with many of the considerations that we have done through these experiments, and I think it's a very nice and concise overview of the issues that are on the table and that we need to further make progress on through dialogue, through experimentation, and I think this is great. So let me stop here and move back to Antony, please.
Thanks very much, Oliver. It's really, it raises a lot of interesting perspectives, actually, that work that you've done. Just turning to Caroline. Caroline, you've been working on this very much from a sort of legal perspective. What are the key recommendations that you've found from a legal perspective that policymakers need to focus on if they're to ensure that the regulatory framework is appropriate for CBDCs?
Thanks, Antony. And perhaps just in the interest of keeping the remarks brief, because we're running short of time, I think that there are a couple of points that Diego has alluded to, but that I wanted just to elaborate on in a little bit more detail. And so the first aspect is really highlighting this importance of creating real legal certainty in the development of any central bank digital currency ecosystem. That sounds like an obvious point, the need for legal certainty, but it's actually completely fundamental, because if we don't know what a CBDC represents in terms of its legal and regulatory status, the whole sort of system will be fundamentally flawed. And so to give you an example, one of the most basic sort of legal questions when it comes to CBDCs is whether the exchange of a CBDC as payment for goods or services actually discharges a payment obligation. Now, that's important because if I go on the Amazon website and if I buy, let's say, a new toaster and pay in a transfer of CBDCs, I've only paid for the toaster if the transfer of CBDCs to the seller actually discharges my payment obligation. Otherwise, I don't actually own anything. I don't own the toaster. I don't have any consumer protection and for the transaction, because there was actually no sale in legal terms. Another important legal question, and that's more relevant to the wholesale space, is if I have a bunch of CBDCs in my account, how can I use them as collateral for other obligations? Can I provide security over them, for example? Are they capable of being netted against any other obligations? And so if we treat them like money, do we have AML requirements that apply? And what about depositor protection legislation? Is that also going to extend to CBDC holdings? So as you can hopefully see from the report, there are a significant number of basic legal questions that will need to be answered to make sure that the whole ecosystem for CBDCs is both robust and reliable. And of course, again, as Diego alluded to, what makes this more complicated is that different jurisdictions may all reach slightly different answers to these questions. And so that brings me really to the sort of the second key point that I wanted to highlight from the report, and that's related to legal certainty, which is really the importance of having global regulatory principles to facilitate interoperability and to avoid regulatory fragmentation. And as you know, Antony, that is one of our key recommendations. What we've established in the report is that there's a huge number of design choices and open questions, as Diego explained, and they really cry out for sort of global regulatory principles and really a coordinated effort to set global standards. And so what we really need in this context is a standard setter to take the lead in developing these global standards, because otherwise what we'll end up with is a whole bunch of domestic projects that all work in slightly different ways in terms of the access requirements, in terms of the features and the outcomes that they produce. And that in turn will sort of result in poor interoperability, not just between different CBDC projects across border, but also poor interoperability with legacy cash system, which currently obviously operate cross-border today. So these, Antony, were the two sort of key features and key recommendations that I wanted to highlight, the need for legal certainty and for also global regulatory principles set by standard setters.
Thank you, Carolyn. Which standard setters do you think should be most appropriate to take the lead?
Well, I think we've got obviously the BIS with the Innovation Hub is clearly at the forefront of a lot of the thinking here, and would be obviously extremely well placed. But the point is, nobody can do this alone, and this is why having a high level expert group from different jurisdictions that can give their expert views and also share the experience from the current projects and experiments that are going on all over the world.
Thank you. Oliver, take note. I'm going to carry on introducing the rest of the panel, the panel interventions, but do please put your questions in Q&A, because we're going to move on to a more quick Q&A session in a moment. But Kunal, through your work here in London, you've been very closely involved with the industry work on CBDCs, including on potential pilots, looking at the technical and design features. But can you share more on your industry view on how the private sector can work with central banks in developing a solution? So Caroline's talked about the legal framework and the role of regulators, but what do you think about the role for the private sector, and what are your thoughts, incidentally, on the also on the progress made on wholesale versus retail CBDCs?
Sure, thank you, Antony, and thanks for having me on the panel. So I think we did a report with the private market, which was published earlier in Feb under Project New Era in the UK, which looked at the retail CBDC landscape, what sort of ecosystem requirements there need to be, how does the regulator and the central bank need to look at it from a design aspect. And I think it was very, very clear that there are some real fundamental design choices that need to be defined and agreed to in conjunction with the market, not least the discussion around resilience of the infrastructure, the scalability of the infrastructure, the interoperability component that's been talked to by a number of my co-panelists, but also by Diego as he was introducing the report. And also, very, very importantly, the whole aspect of this bank disintermediation that is a live debate in the market today. So the private market essentially is now looking to kind of come together and work on a pilot that outlines some of the empirical views on each of these design principles, and also make sure that the financial stability as a result of introduction of a retail CBDC is maintained. And this whole point that, we've touched upon this whole liability issue a number of times during our session today. The implication of that clearly on the banking market and the supply of credit in the market is if there isn't a fractional reserve banking facility or a different kind of liability structure on CBDCs for commercial banks, for instance, any displacement of commercial bank digital money with CBDC essentially results in reduction of flow of credit or increase in the cost of credit in the market, quite obviously. So, these are not sort of, small design choices. These need to be very well thought through by the regulators and the Bank of England here in the UK. But I think we're very fortunate in the way that the consortium of the private market that is coming together in the UK to run a series of pilots in the next few months. The regulators, the central bank here, they're all kind of very open to sort of engaging with the consortium to get the feedback on an ongoing basis, to understand the choices they should be making in a more structured, informed way. And also, quite honestly, the infrastructure requirements of a future CBDC rollout, retail CBDC rollout, will need to be undertaken in a more considered manner, because the whole point around scalability that I mentioned in a retail environment is very important. The aspect of programmability of money or conditionality of payments to realize the innovation potential of a CBDC is also very important. At the same time, the finality or instant settlement aspect of that infrastructure, which is not pre-funded in a way that faster payments is today in the UK. So I think there are just real important considerations on the infrastructure side as well. So both the design choices on CBDC itself, as well as the considerations on infrastructure, will need to be well thought through. And good news is, there is time. We don't need knee-jerk reactions. A number of central banks are still researching. Some of them are moved into clearly proof of concepts and pilots, but broadly we have time over the next couple of years to really test this and form a good informed view on what is it that the introduction of a retail CBDC could look like in the market. Now, with regards to wholesale versus retail CBDC, I think there is a lot of work that's happening globally on wholesale CBDC. Lots of pilots have already been done. Retail CBDC, on the other hand, is still in its nascent stages of research and development, but one that is now being taken very, very seriously by pretty much most of the global central banks, including the Fed, the Bank of England, the ECB, and many, many others. And I think that just goes to show that alongside wholesale, retail CBDC ecosystem will develop eventually. And I think that the phrase I hear very regularly is it's a question of when, not if. And we see the evolution rapidly over the next few months and years.
We can now, before I turn to Josh, can I just ask in the work that the different central banks are doing, which ones do you think will be the first to move forwards with CBDCs?
People Bank of China has already introduced e-yuan, ECNY. I think there is a retail CBDC in Nigeria. There's introduction of that in Bahamas as well. We know that there are many other markets, particularly in the eastern part of the world, where this activity is more accelerated. But I also have to say, I think the Fed with the Biden executive order, Biden administration executive order, ECB with its digital euro project, Bank of England also now looking at it very, very seriously through its task force. I think it's in my mind, it actually isn't necessarily a race per se, in so much as it needs to be well thought through. I think the policy agenda alongside the regulatory agenda of this form of digital currency is very important to get right. which is why in the UK you see the lawmakers now, including the House of Commons, they are getting very, very involved. In fact, the Project New Era in the UK has a very close association with the Crypto and Digital Assets All-Party Parliamentary Group in the UK in the House of Commons, because the lawmakers understand that the societal benefits of a retail CBDC should be delivered in a way that enhances the economic value of that asset, and does distribute the benefit to the man on the street.
Excellent, thank you. And just to remind everyone about the Q&A box, and also the link to the report has been posted in the chat, so you can see that there. Josh, just building on Kunal's comments, you've been doing a lot of work in the Atlantic Council on tracking CBDCs. Can you shed some light based on this research you've done, and build a bit more on what the US is doing in this area? And also, how do you see geopolitical considerations coming into play in the development of the CBDCs?
Sure, happy to answer that, and just want to agree with what my fellow panelists have said on many of the challenges on interoperability and standard setting, and congratulations on this report. I know we'll share it widely on our side here, so thank you for doing it. I think it'll be really useful and impactful. So we started the CBDC Tracker project, and we can share in the chat here 2 years ago when I came over to the Atlantic Council from the IMF. At that point, we estimated there were 35 countries in some phase of CBDC exploration, both retail and wholesale. The latest update we did a month ago showed that there are 105 countries in some phase of CBDC exploration. So rapid acceleration, as we've talked about in this panel, of interest at least in adopting a CBDC. Now, what's driving that? Of course, one, we understand the rise of cryptocurrencies. That's motivation for central banks. But I think the lesser understood motivation is the pandemic and the need for fiscal and monetary authorities to deliver money to their citizens in a way they never have before, in a volume they never have before. And as we think about a potential recession, global recession, economic recessions in our own economies, I actually think those motivations may come again to the forefront sooner than we would want or anticipate even a few weeks ago. So if we think about the rise of CBDCs, and we can look at a few details, I think what's really important to flag for this discussion is that we don't have to make these decisions in a vacuum. And many economies and many countries are far more advanced than the US and the UK. One pushback I get from US Treasury is, well, yes, a lot of countries are doing this, but how many are serious about it? And if you look at our tracker, 50 of the 105 are actually in development, pilot, or launch. So what we would consider a serious phase of exploration. So it's not just the central bank saying we're interested, we're issuing a press release, we're going to explore it. There's actually resources and time invested in this in many economies around the world. As Kunal said, Asia in particular is an innovator in this space, but not the only innovator. Even within the G20, 16 of the G20 economies are in development, pilot, or launch. And it's really the US and the UK, unfortunately, that are furthest behind in this space. The only economy other than that of the G20 who hasn't announced a project is Argentina, and Mexico I would put in the US, UK category. But everyone else is further along. And so I think that's important as we think about 95% of global GDP to understand where they're headed. And if we're worried about international standard setting and interoperability, we have to recognize that the US and the UK voices need to have models to bring to the table in the international standard setting conversation. It's not enough to say these are the principles as the G7 has done. It's important to say this is a model of an effective CBDC, either on the wholesale or the retail side. So I just give a few of those top lines. There's a lot of information in the tracker that we think is useful to this conversation. Which countries use DLT and which don't, how they do AML KYC within their CBDCs. And I do think one thing that's important, and I saw this already in the chat, every country we look at does this in an intermediated way. No country does a direct CBDC from the central bank to consumers. And I just think that's important to understand, at least on the retail side, as we think about the development of CBDCs. Now, from the US side, Kunal talked about the executive order That was an important step for the administration because they talked about digital assets with democratic values. And we hope that's something that was noticed all over because we had not seen that language used before. What does that mean in practice? That means developing a CBDC that protects privacy, that protects civil liberties here in the United States, our Fourth Amendment protections. That is really the challenge, because if we think about why the West has been slower on these issues, there are many technological reasons, there are use case reasons, do we need it in our economy? And the largest one from my perspective is the privacy challenge. And if that can be overcome from some coordination between the UK, the ECB, the Fed, I think that could be a very powerful standard setting device, but it's an extraordinarily complex technological and policy challenge. Last night, Treasury came out with the first of their series of reports that will be due over the next several months from the president's executive order. And I'll read just a line from it because we had never heard this from Treasury before. The United States must continue to work with international partners on standards of the development of digital payments architectures and CBDCs. That's great. That's what we want to hear. The problem is they list 5 different organizations, and this goes to the point Caroline was making in their report: the BIS, the IMF, FATF, the G20, the G7. We have to choose. It doesn't have to be everything, but there has to be a leader in this space. And I want to congratulate the BIS and Oliver and the team who's done such fantastic thought leadership in this space, but we have to figure out what is the coordinating fora for this work. And so then finally on the geopolitics, to your question on the wholesale side, when we study this, we saw an increase in retail over the past 18 months. And that was driven by the motivations I talked about, the cryptocurrency usage, the pandemic usage. But over the last 8 months, as we look at it, the interest in the wholesale side has rapidly increased. In our tracker project, you'll see there are 8 now wholesale projects. The BIS is involved in many of them. There are important ones all over the world. China does a very important one with Thailand and the UAE. There's another one, Project Dunbar, South Africa, Malaysia, Singapore, Australia. But there's an increased interest in this post Russia's invasion of Ukraine. And that hasn't shown up in all our data and tracking yet. But I think it's very important to recognize, as we see the sanctions implementations the G7 has done on SWIFT, on financial transactions, that there is an interest around the world in emerging markets and other economies, even friends of the US and the UK, of looking at alternatives of the current bank-to-bank transfer system. And that's a transition we've seen only in the past few months. I think it'll show up in the data as we do this over the coming months. So I'll leave it there to start and look forward to everyone's questions.
Thank you very much, Josh, and thanks for joining from the US. It's really great to have your perspectives. Well, we're going to go on to some of the questions now, and the first one's concerns something that's specific to the UK, but the UK's House of Lords has done a review into central bank digital currencies, and Natasha Shoes quoted their assessment that CBDCs are a solution in search of a problem, and be grateful to. I think that's a great way of starting off the Q&A. Maybe Kunal, if I come to you first, what's your assessment of that assessment?
Yeah, thanks, Anthony. Yeah, I mean, see, it's an important question, and primarily led by the fact that the House of Lords, when they did their inquiry into this topic, the report was published in December. Admittedly, much has changed since. It's 6 months is a long time in digital currency environment, and CBDCs have become at top of the pecking order for central banks, given last few weeks activities in the broader crypto assets market. I think the House of Lords rightly focused on the fact that UK has a well-functioning financial market infrastructure and a well-functioning payments market infrastructure. Why do we need a retail CBDC? And their view was wholesale CBDC could potentially be the right outcome for the UK. Now, since then, I think the market has evolved significantly, as I mentioned. The broader stablecoin and cryptocurrency market has also sort of demonstrated the fact that a broader policy agenda and regulatory governance needs to be put in place for these sort of assets. And CBDCs are one way in which the central banks, and increasingly, as I mentioned earlier, the lawmakers are now looking at introduction of some form of digital currency in their markets. And the other thing I would highly focus on is the use case, which ended up being a kind of focus of the discussion at the time, is not about replacing your normal retail transactions. This is not about CBDCs being just leveraged to buy a cup of coffee in a store, for example, but the use case of a CBDC, a retail CBDC, is much broader. Josh alluded to some of that, right? The government to consumer disbursements, the claim, the benefits payments, the minimization of fraud in the system, enhancement of efficiency, conditionality of payments. I think really, really taking forward the innovation agenda in the payments industry that delivers on the promises of a future retail and commerce environment for consumers. I think that's where CBDCs are really going to be a great sort of addition to the monetary system, to the currency ecosystem. So I think yes, it's a cynical view, and I think it's a good way to challenge the industry. But I do think there are some real progress globally on this, as well as in the UK, that will hopefully try to address some of the questions they've raised.
Antony, if I may just add to what Kunal said, I agree with your view on this. I think the House of Lords was taking a very domestic view of the problem, which admittedly is their brief. But we've been talking about interoperability and being more ambitious in terms of trying to create potentially at least a more cross-border environment where cross-border payments ultimately may become possible. If anybody has recently tried to make a cross-border payment, the number of financial intermediaries involved and the fees that are payable in respect of that are still very significant. And if there's a way of improving that over time, and clearly because of all the challenges that we've already alluded to, that's not going to be tomorrow, but it may be at some point, and I think we should be ambitious. If that is possible, that would certainly improve, even for UK customers, would improve the payments environment, even though there's no doubt that we've got an incredibly sophisticated and well-functioning domestic payment infrastructure that exists today. I think it's more in the cross-border space that the improvement we as UK consumers will be able to feel an improvement ultimately.
Thank you. Oliver, have you got any thoughts on this question as well? It's a sort of meta question, so I'm happy to spend time on it.
So I mean, I like the quote a lot. Is CBDC a problem, a solution in search of a problem? Maybe it is. So to kind of make maybe a counterpoint on my previous panelists. Now, why can I take this position? So from a consumer perspective, today's payment infrastructures, today's FM financial market infrastructures in general, they work well. So at least in our developed economies, payment infrastructures are relatively cheap. It's and in many countries actually, fast payment systems have been developed, and they are now in many countries they are live. So why do we need a CBDC? So it's not such an easy question, I think, to answer, and I think we need to put more kind of groundwork on that. So in that sense, I would agree with the quote. But then on the other hand, I think there are very clear use cases for CBDCs, and so coming from kind of this wholesale space, I see a lot of potential value for wholesale CBDCs. As Caroline just mentioned, cross-border payments using CBDCs might be one use case. And another use case might simply be driven by private sector development. So in Switzerland, for example, we now have a live financial market infrastructure that builds on DLT. Now the question for a central bank automatically arises, so what do we actually do? So if this financial market infrastructure becomes relevant, does the central bank want to offer settlement in central bank money on such a platform? i.e., does it want to issue a tokenized form of central bank money? And I think these are the relevant questions. So that would be my opinion on this.
Thank you very much. Well, I'm going to go back to the other side of the Atlantic now, because given the activity in the US, it may be that what goes on there may end up defining to some extent what happens more generally, and also the speed at which it happens. And I wondered if, Josh, maybe you could elaborate a little bit on developments in the US and how you see them moving in the coming months and years.
Of course, happy to. And I think what's happened actually both in the Bank of England and the ECB has prompted the US. And I'll start by saying that the new vice chair of the Federal Reserve, Lael Brainerd, who is a leader on this issue in the US, has been a leader on this issue for years. The first testimony she gave as vice chair last month, that just recently confirmed as vice chair of the Federal Reserve, was on this issue in Congress. And she chose to speak about this issue on the range of issues that she could speak about to Congress about. It was on CBDC. And her testimony is well worth reading. It gives you insight of where the Federal Reserve may be headed on this. But one thing I think is really important to note, she mentioned the European Central Bank, the ECB, many more times than she mentioned ECNY, China's digital currency. That's a shift on Capitol Hill, because the way this conversation has typically been happening in Washington was, wow, look at what China's doing, we need to catch up. And I think what many of us on this side have been saying is, yes, what China's doing is important and we should pay attention to that. But there are a lot of countries around the world interested in this for a range of reasons. And we need to understand that from a US leadership perspective, from dollar reserve currency perspective. And I think the Fed is coming to that position. The question is, what do things look like going forward? So we have the president's executive order has been talked about. What that means exactly is that what the president has done and what the White House has done has said this is not just an issue for the Federal Reserve. This is an issue for Treasury, for Commerce, for all agencies in the US government to work on, both on CBDC, but then digital assets more broadly. And that gives a lot of energy and motivation behind the work. And they have a series of reports that are due in the fall about what the next step should be. And one thing we see in our research is that every country that successfully develops, pilots, or launches a CBDC does so with a coordination between the finance ministry in that country and the central bank. And so this often gets talked about as just an issue for the central bank to do. That's wrong, because the central bank has a key role in this process, obviously as the issuer, but there are significant policy, financial decisions that have to be made at both a legislative level in democracies and then a treasury or finance ministry level in economies. So I think we're coming to that realization here in the US, but a little late, unfortunately. So these reports will come out in the coming months. And then what you can expect to see is two things. One, I hope and think there'll be some motivation for a pilot project in the US, but we've been primarily, and I think based on this report, unfortunately, overly focused on the retail side in the US. There's been very little work on the US done on the wholesale side, and it would be the New York Federal Reserve that would have the primary responsibility for issuing and testing and developing a wholesale CBDC. And so what I think you will see happen in the coming months is some motivation for a pilot project in the US on the retail side, and hopefully in complement to that, the New York Fed looking to partner institutions like the Bank of England, like the ECB, to do wholesale experimentation, and at the same time, Congress getting involved. And we expect some legislation on digital assets to happen in maybe the lame duck session, which is December on our end. So basically what I would look for in the US side is over the next 6 months, a lot of movement. There's been a lot behind the scenes, but I think you'll see a lot more publicly. And it's still, as we all know, a multi-year process. We are talking about 4, 5, 6 years to any sort of widespread development of these digital assets. I do think the digital euro is on a faster timeline than that. They've made clear they're at the middle of the decade. I think the Bank of England and the Fed are really towards the latter part of the decade if this happens.
Thank you, Josh. And lame duck administrations is something we're getting used to in this side of the Atlantic.
It's not going to make any comments about politics.
I mean, Kunal, you earlier on, you touched on disintermediation, and we've had a question from Gareth Murphy about that, given the implications of central banks becoming the banking system becoming disintermediated. Caroline, I wondered if you could comment on that from what, you know, what do you think might be the consequences of a credit and the wider economy if this disintermediation would lead to a lack of deposits?
Yeah, so I think Kunal's already commented on some of the potential consequences of disintermediation, but I think one of the things that's perhaps not as widely discussed is the fact that, of course, when sort of banks take deposits, they do so in order to earn an interest on them, and of course we've had many years of very low interest rate environments, so that wasn't the primary factor. The other thing that banks do with deposits is that they lend them out and turn them into loans and earn interest on those loans. And what I think hasn't been widely explored is the potential effect for the wider economy of the introduction of a central bank digital currency, and that essentially being used in the same way that money is being used, but that which wouldn't constitute quote unquote deposits from a banking perspective, and so really what the effect would be on the banking system and the availability of credit to the wider economy. So I'd be interested to see if some of the other panelists, I don't know, Kunal, whether you have any thoughts on that and whether you've explored some of the thinking as part of your work.
Yeah, Caroline, I think the availability of credit and the cost of credit is going to be a big, the big question, isn't it? I think there is clearly a, even in the Bank of England consultation here, they were doing a bit of scenario analysis and suspected that, a 20% could be a base case around displacement of commercial bank digital money by a retail CBDC on commercial bank balance sheet. Now, the responses, as far as we know, indicated by the banks that this could be much higher, to the extent of even 35% or more. Now, that clearly is a massive amount of displacement of commercial bank digital money, which is fractional reserve banking, enabled, with a form of liability on your balance sheet, which you cannot lend against. Now, that is a problem with regards to the availability of or supply of credit in the market, as well as the cost as a result of credit in the market. Now, it is not to say that it doesn't have any mitigating actions. Now, clearly, ECB has come out and said we'll put a cap on the limit of CBDC circulation in the economy, and a cap on the amount of CBDCs that can be held in a wallet, for example. But now, Diego mentioned earlier that what do you do with a super user like a merchant who does, accept, if you like, these CBDCs? You cannot limit that level of CBDC accumulation in a particular set of super users in the market. So there are some real, considerations, or even more detailed thinking that needs to be had, more consultation, more industry participation, which is why we think this private-public partnership to get to an answer on these things is the right way to go, because we shouldn't be solving for this a sizable shift in the way we look at the currency ecosystem, monetary policy, fiscal policy in each of the economies in a more isolated manner by certain authorities or stakeholders in the market. It does need to be a more collaborative approach. And I think the central banks are kind of moving in that direction of collaboration and being more flexible in the way a system can be put in place that minimizes these risks to financial stability, which is important to maintain.
On that question, We're having an interesting debate in the UK at the moment about what the objectives of financial regulation should be, and in particular, there's a debate that will happen eventually in Parliament about, you know, should competitiveness and growth be something that the bank is given an objective to facilitate. How can you explore a little bit more that potential tension between facilitating innovation and allowing things like CBDCs to happen and banks' stability objectives? And do you think that the primacy of protecting financial stability will be something that is going to hold central banks back, or could potentially prevent them from allowing a more innovative approach to take place?
Sorry, is that for me, Anthony?
Yes, or if anyone else wants to comment on it.
Well, I see. This is one of the design choices to be made, right? I think if you compare it with the data privacy point that Josh raised earlier, that's an equally hairy topic around the design choice that the central banks need to make. So I don't think one specific design principle will be a limiting factor. I think that the right answer will lie in how we balance the design principles, many other design principles, including cybersecurity risk, around resilience of the infrastructure, around interoperability, around programmability, around the level of value that this introduction of a CBDC can bring to the economy and the global commerce. I think all of these design principles need to be looked at in conjunction. I do think the central bank will be particularly interested in maintaining financial stability. That's their primary role. And I do think commercial banks will work closely with the central banks and vice versa to get to an answer on this. Because the other thing is yes, we are focusing on commercial banks, but CBDCs are also a mechanism to bring into play or democratize even more the role of the likes of EMIs and PIs in the European regulatory language into the financial services, into the payments, into the broader FMI economy, because currently, clearly there are restrictions in the way they can operate and participate in the flows of payments, right? So I think this is also about democratizing access to financial services and financial markets for much of the other players as well. So I think we need to be broad brush in our approach. Each of the design principles is a challenging one, but that's the point. We take the time now rather than take knee-jerk reactions when everyone else has moved.
Absolutely. Thank you. Oliver, did you want to come in on some of those points? Yeah,
thanks a lot. So I agree with Kunal very much, and I don't want to repeat on the points that he has mentioned, but let me just pick up on a couple of points on design choices for CBDC. So I think there are three main dimensions that we need to think about. One dimension is kind of the technical layer. So how should a future system look like from a technical perspective? Should it be built on a blockchain or not? So I think we're not ready to answer this question. Then there are many operational questions around, like how would you actually deploy a CBDC, be it on a wholesale use case, but also for a retail use case. And then last but not least, there are many policy questions. And I think policy questions in general, they are probably more delicate in the space of retail CBDC compared with wholesale. Now, I think the central bank community is in general very well placed to think about all these policy implications. But when it comes to these technical and operational questions, I think that public-private partnerships will be essential to explore the benefits and challenges of different implementations, and at the end of the day, to move forward with some infrastructures. Yeah, so I think that's what I wanted to say. Maybe to end, central banks are probably, and again picking on these points, central banks are probably are not very well known to be innovators, right? So we effectively need collaboration, especially on the technical and operational side.
Thank you very much. Well, we're approaching the last 10 minutes now, so just a reminder to everyone, if you've got any questions, to pop them in the chat or the Q&A box. One, I think, you know, it might be a good idea to move on to the international aspects and the interoperability of CBDCs. And Oliver, if I can stay with you, in your work that you've been doing at BIS, what sort of best practices have you come across in terms of making sure the design of CBDCs works consistently or coherently internationally? What are the types of things that you're seeing that you think could be replicated or should be replicated by countries as they move forwards with this?
Yeah, I think this is a very good and also a very important question. So the BIS Innovation Hub has been involved in a couple of cross-border experiments. One of them is Project Jura. I talked about that, but then you also mentioned Project Dunbar. There is a project, the MCBDC Bridge, which is led by the Hong Kong Center of the BIS Innovation Hub. Now, all these experiments so far, they have been done in platforms that are shared in some sense. So it's one single platform where different central banks issue their own CBDCs. And one of the essential questions that were addressed in different ways in all of these experiments was, how do you actually grant sufficient or the necessary controls to the individual central banks over their own currency? And I think that technically, at least, it is possible to share platforms and to allow the circulation of different CBDCs on a single shared platform. But there are many policy questions around that. And is that so? And then maybe, like, thinking ahead, would this really be something that we will see kind of at the large scale in the future? I'm a little bit skeptical to some extent, because what I could imagine is like the setups we have seen so far, maybe smaller regional networks that are interoperable to some extent. There may be multiple CBDCs circulating on a single platform, but there won't be just one platform. So working towards kind of standardization, both on a technical but then also on a legal level, will be very important. But I think we are at very early stages of the development, and there is still a long way to go.
Sorry, Antony, can I ask a quick one to Oliver on that point? Because I think clearly, you know, there's a significant talk about, you know, the Web3 on which a number of these things are going to be built is primarily going to be a network economy, much more than Web2 has been, right? So to some extent, I think, Oliver, what you're alluding to is we will ultimately need, particularly for interoperability at a global level, a level of network, a single network, or a collaboration of some limited number of networks for this to work. Is that how you see it evolving going forward?
Yeah, it could be one. I think it's one vision to see different kind of regional networks that interoperate with a larger network, and this larger network could actually be a public network. So it could be a public blockchain. I would say that this is still a very long way to go, but at least, so kind of from a technical perspective, these public blockchains could build a layer to enable interoperability. But it doesn't need to be. It could also be interoperability between different private and permissioned networks between countries. So yeah, it's many open questions around that, but very interesting.
Josh, just on that point, I mean, in relation to timeframes, you know, how soon do you think we might see the development of a international framework for CBDCs? At the current rate, what do you think this would, you know, how soon could this be a reality?
Yeah, I think the answer is not soon enough. And Caroline brought this point up in her comments. You know, the countries are doing this understandably based on their domestic use cases. This is how a central bank primarily thinks, financial stability in their own economy. And then the secondary thought now is, well, cross-border interoperability, but very secondary to the primary concern of, do I need this domestically? And so what Oliver is getting at, I think, is basically two potential futures. One is a more optimistic look of interoperability, networks that can work with each other, facilitating faster cross-border transactions. But the other very real possibility is a more fragmented international financial system, where you have different systems that are not interoperable and create different poles or systems that actually have more friction in the transfers than we currently have now, which would be a terrible way to take this technology and translate it into the future. And I would point to something the IMF said in May. Kristalina Georgieva gave a speech about massive investment in a public infrastructure blockchain network. And I think that's very important for the IMF to make that kind of statement, because they're seeing this potential fragmentation as well. And they're saying there has to be some sort of mechanism, clearinghouse transfer of this. But I think what we're going to have happen is that the domestic projects will rise. We will unfortunately see the frictions, and then hopefully layered on top of that, we will be able to build something that alleviates them. But I don't have a lot of confidence that we're going to be able to front run that from the international side.
And on that point, I mean, you make a good point about the different jurisdictions and you know and how you overcome them. I mean, Caroline, if you take, for instance, one of the major benefits of CBDCs could be an enhanced international payment system, for instance. But to what extent do you see different jurisdictional, legal, and regulatory frameworks being a barrier to making it a reality, and how might they be overcome?
I mean, I think clearly that is going to be the inevitable result. It will be fragmentation unless there's a concerted effort to avoid it, because for the reasons that Josh just explained, if everybody looks at this domestically and the starting point for everybody is different, that by definition, then we are just going to end up with a with a fragmented landscape and a fragmented ecosystem. I think the only way really to avoid this is, the point that all of us, I think, on the panel were making today, is that there's a need for international collaboration and some direction being taken by a standard setter in collaboration with a high-level expert group to really set global regulatory principles, which then jurisdictions can adapt for the purposes of their own domestic use, because nobody's pretending that it's possible to impose anything top down that looks the same, and nobody wants to do that, because people still will want to have the flexibility to implement domestic systems that suit their economy and their particular circumstances. Everybody's coming from a slightly different base here, but the point is setting global standards, a bit like in some ways when you think about the regulatory capital space and how standards are set globally and then implemented in different ways in the United States and in Europe and across the world. When you look at things like Basel, the Basel Accord, I think that it is possible to set global standards, and that, I think, gives us the best possible shot at creating an environment that facilitates interoperability rather than just leads to inevitable fragmentation.
I mean, I think that's critical, and it's really key. And if you look at the for instance, progress on something like the internal market and capital, the capital markets union in the EU has always, has historically sort of run up against these different jurisdictional legal and requirements and other things. So it's really important to try and get that out at the outset. But we've got the last few minutes, so I'm going to ask you all a sort of if you ruled the world kind of question. And what would be the sort of one thing in a sentence that you would change that would make CBDCs an international success? So Oliver, for you first, if I may.
Oh no, please not. So what would I do? I would love to see a CBDC on a public blockchain at some point. Maybe not now, but in the far future. So that's kind of my vision.
Public blockchain in the far future. Thank you. And Josh, what would your major reform be?
I would try to have a coordinated standard on the privacy issue between the big four central banks: Bank of Japan, ECB, Bank of England, Fed. And I think that will be hugely influential across the entire world if we could get some design and policy agreement on that particular issue.
Absolutely. Kunal?
I think I would echo the central bank point from Josh, but on regulatory standards and consumer protection.
And finally, Caroline, always difficult to go last in these questions because everyone's...
It's been said, to be honest, and at the risk of sounding like a broken record, I think to have a leader, we need a leader and central coordination on some of these design choices, be they, privacy, regulatory standards, legal certainty. I think all of the design choices that we've touched on today, we need some leadership to set standards that other jurisdictions can then take and work with.
Thank you very much. Well, then we're at time, so all that remains for me to say is thank you very much to all of our panelists, to Caroline, Oliver, Kunal, and Josh, especially for dialing in from the US. And I also want to say thanks in particular to Diego and Caroline for working on the report, and to Clifford Chance for being able to make this happen. I think you have facilitated us as a group of people in the IRSG to bring together a cross-sectorial view from the financial services industry based in the UK to bring this to bear. So thank you very much indeed. And also because people don't get enough shout outs to Annette Andermain, who works at the City of London Corporation and who has steered this to a conclusion throughout many months. So thank you very much. I do hope everyone will look at the report and see it as it's published and come back to us and talk to us if you've got any thoughts or comments on it. And finally, last and by no means least, thank you to our 1.95 people who dialed in to watch this and see this. It's been I think a really useful and interesting session, and thank you. Take care everyone, and goodbye, and have a lovely weekend when you get there.